For the bulls, it's also a breakout test of 50, but the bears who sold the 50 high made money. You see 64 fell one tick below the 50 high. That means some bears sold the 50 high. They sold more 1 point higher, 2 points higher. They tried to sell 3 points higher, and then they got out at the 50 high. The bulls knew they would do that, so the bulls bought there as well, and that's what's causing this little bounce. Now, what happened to the bulls who bought above 65? They're probably thinking, too aggressive, I shouldn't have done it. And that's part of the reason why we got this tail 66. Some of the bulls who bought the close of 64 or who bought the high of 50 are just trying to scalp out for 1 point. And you'll have limit order bears selling the 65 high, betting a bad buy signal. Now, why is the 65 high exactly, why is the 66 high exactly where it is? Think about it. Look at 61. A bad sell, so limit order bulls bought the 61 low and bought more lower. Disappointed at 62, 64, many tried to get out break even. It had to go one tick above the 61 low to let them out break even. What did 66 do? It went one tick above the 61 low. And why did it sell off? Why do we have that tail on top? The bulls who bought the 61 low sold out of their longs, and they created that tail, 66. Remember, the bears want to get below the moving average. Moving average is a magnet. The bottom of the north-eastern buy climax, 58 low, that's a magnet. But both are very close to the 67 low, 66 low, so not a very good short. The 54, middle of the tight trading range, the 40 bar tight trading range is a magnet as well, but not much room and not a very strong sell setup. So I think better to wait. If the bulls are lucky, we'll go down to the 58 low and get a good buy signal bar like 53, and maybe they'll get a rally into the close. This is the past 50 bars, just really bad for stop entry traders. It's all limit order trading. As I said, some stop order trading, buying above 53, probably the best choice. Maybe buying above 42 and using a wide stop. But other than that, everything has been limit order trading. Traders buying below everything, scaling in, selling above everything, scaling in, and scalping. We get back to the moving average. Bulls trying to duplicate 53 and 27. A dip below the moving average and a decent bull bar. So, do you buy above 68 and scalp out with 1 point? No. If you buy above 68, you're hoping for a swing up. You don't want to be risking 2 points to make 1 point, buying in a small, tight trading range and in a trading range today where the probability is not all that high. So if you're buying above 68, you're hoping that we go up here and you can make 3 or 4 points. Will the bears sell 68? One of my rules is if the market's always in long and you get a high 2 with the bull bar or the bull buy signal bar closing above the moving average, I don't sell that. So I would never sell the 68 high. This is becoming less good, which is counterintuitive. You think a bigger bull bar is more good. Well, it depends on context. And a bigger bull bar here is less good for 2 reasons. Well, several reasons. One is you got a tight trading range and it's forcing you to buy at the top. So lower probability. The bar gets bigger, so it's bigger risk. And look at 27 and 53. The market fell a couple points below the moving average and snapped up. And here, there's no overdone sell-off. There's no snap effect. So you don't have a lot of panicked bears buying back shorts. So I was going to buy above 68, and now I'm not. It's about a point bigger than I want. Plus, it did not dip far below 60, below the moving average. So as much as I want to buy, I'm not buying this. You can see it hesitating 5 ticks above 68. That tells you that a lot of limit orders to sell are there. It tells you that a lot of the bulls who bought above 68 are trying to scalp out for 1 point. So that's not strongly bullish. Bears trying to get a double top, 61, and then a measure move down back into this potential final flag. To sell below 69, bears obviously want to get a bear bar. They like to get as good a bear bar as they can get. And for the bulls, they're hoping that we trend up for the remainder of the day. But, just look at the day. So many of bars have been sideways right from the open. The first 3 bars, big tails. So not a good sell for the bears, not a good entry bar for the bulls. Still always in long. Maybe it was always in short, 26, not clear. 4 bear bars, 2 closes below the moving average. But basically, all day it's been long. So theoretically, if you're in a position right now, you're long. I'm flat. Bears want a higher high major trend reversal. 2 ways to look at this as a wedge, several ways. You could say 1, 2, 3, or 1, or 1. I would call it, this is a higher low, or 53, 42. I would say it's a wedge, 1, 2, 3, or breakout here, 1, 2, 3. I think fewer computers would use 15. Bulls, I'd get out below a bear bar. And for the bears, they're hoping to get as good a sell signal bar as they can get. Breakout 58, 59, 60. Bulls look for a second leg up. And this meets that requirement. And you can see there were sellers above 61. Can we get back to the middle of the trading range? Sure. Right? Is it likely? It's more likely the market's not going to go very far up or down. But if 71 closes near its low, bulls will get out and bears will sell, taking a chance that we trend down into the close and get back down to this area. If 71 has a 3-tick tail, maybe even a 2-tick tail below, I think a lot of the bears will wait. They want it to close on the low, maybe a 1-tick tail. The bulls know that, and they're trying to prevent the bar from closing on its low. They'll be happy if they can get a 2 or 3-tick tail on the bottom of the bar. That will reduce the number of bears willing to sell below 71. Bulls are hoping that the entire day is a spike and channel up, spike, pull back, and then channel. So they hope that we just keep going higher. But I think if this bar closes below its midpoint, it's better to get out of longs below. And if it closes on or near its low, it's probably okay to swing, take it for a swing short. It's not like there's much of a chance of a big move up or down. So there's not a lot of profit potential. That makes the trader's equation bad. If the chances of the market moving far are small, that means you do not have much of a chance of making a big profit. So the probability is not great. The reward is not great relative to the risk. And when that's the case, you have a lot more traders trading with limit orders, selling above things, buying below things, and scalping. And that's something I think most traders should not do. They will not make money. They will lose money. Same thing. The bears are trying to get as good a sell signal bar as they can. If they get a pretty good sell signal bar, they'll sell, taking a chance that we get down to the 68 low, maybe the 55 close, the middle of this tight trading range. And the bulls are trying to prevent the bears from getting a reasonable sell signal bar. Still more traders willing to buy than sell. I'm currently flat. Even though we've been rallying all day, it's not strong enough for me to buy at the high. I want to buy pullbacks. And I chose not to buy 68. This is a nested wedge. We have a wedge here. Up, pause 2, pause 3. Bears want reversal. So it's a small wedge within a bigger wedge. 1, 2, 3, or 1, 2, 3. But the bears need a sell signal bar. Bear bar, bear bar 73, 73, but conspicuous tail. That will reduce the number of bears selling below 73. As you can tell, I'm thinking there's a pretty good chance we're going to reverse down at least a little bit into the close. But that does not mean it's easy to structure a reasonable trade. We have a bad sell signal bar, 72, similar to 50 and 61 and 31 for that matter, and 15, right? So we're getting sell signals with bad sell signal bars, and the market does not go down very far. So it's a low probability sell. Testing the moving average again, but the math is just not very good. So even though I think we're probably going to go down at least to the 68 low, the most recent higher low, it's not a stop order sell. You can see limit order traders selling above things, above 61 made money, selling above 35, selling above 50, selling above 61. But it's not so easy for stop order traders. Big bear bar closing near its low, but at the moving average, which has been support all day. Will there be a lot of buy the close bulls, 74, like 67 and 52 and 25 and 26? I'm not going to do it. So right now I'm stuck on the sideline. Another high one at the moving average, like 53 and 65. There was a high 2 at 68, but 2 decent bear bars. I'm going to let it go. Plus we have a possible nested wedge, parabolic wedge here, 1, 2, and 3, and wedge 1 or 1 and 2 and 3. So, and probably not much profit potential. So I'll wait. High 1, but a couple of bear bars, similar to 50, 65. High 1, but bear bar 62, 64. So I suspect sellers above, but it's getting pretty late in the day to be entering with limit orders, especially selling above a bull bar in a bull trend. So probably sellers above, but I'm not going to do anything. I think I'm probably not going to take any more trades today. A little off top, so now the wedge is 1 pullback, 2 pullback, 3. But obviously, part of what took place here is you had limit order bears 72 high using tight stops, and the computers sensed that and they ran the stops and then they sold. This is kind of the opposite of bar 3. Big bar, big risk. So bar 3, a good bull bar, but big bar, big risk. And here, if it remains a bear bar, you got big risk. Tight trading range around bar 75. Usually better not to take any more trades. Well, we knew at the start of the day, well, we knew a few things coming into the day. Friday was a very strong bull trend day, all day, climactic, and therefore 75% chance we would have at least a couple hours of sideways to down trading starting by the end of the second hour. Here it started bar 14 right after the end of the first hour. And we were sideways for 2 or 3 hours there, which is, reasonable. On the open, I personally, when I see bars like 1, 2, and 3 on the open, my thought is, oh, no, I want to stop order trading with easy swing. And here I am seeing bars with prominent tails, and the first 5 bars all overlap one another. In fact, the first 7 bars overlap on every bar of the day. Well, actually, that's not true. They didn't overlap one, but the first 5 bars all overlap one another, and big tails. So bar 1, we have a tail above, a tail below. Same with 2, and then 3. Now 3, we have consecutive bull bars, one with a close near its high, but not that big a body. And we have consecutive closes above the moving average, 2 barely above the moving average. But the bars are big, and we're at the top of a tight trading range, and we know we're going to get a couple hours of sideways to down trading today. So that's really not an ideal setup. So yeah, it's a buy, but it's a swing, and it's not easy to hold long. We keep getting sell-offs. 4 sold off and then rallied. 5 sold off and rallied. 7 sold off and then rallied before the end of the bar. We did go up for 13 bars without a pullback, and I talked about that repeatedly in here. Once we started to get 4 or 5 bars without a pullback, the odds were we were going to go a little bit higher, because once you have 4 or 5 bars on the open without a pullback, traders will buy the first pullback. So we went up to 13 bars. We reversed down below 15. We had a bear surprise bar 16, not particularly big compared to a lot of the other bars today. Plus, we knew traders would buy below 15. However, 16 is a bear surprise. We should get a couple legs sideways to down. Also, it's a buy climax. We should get a couple legs sideways to down. And we know that by around bar 24, we should begin at least a couple hours of sideways to down. So it might begin here. This is also a little bit of a parabolic wedge, 3 legs up, 2 and 8, and then 15. Bull surprise, 12, 13. Should get at least a small second leg up. 15 qualifies, so does 18. So the bull's got the minimum objective. When you get that kind of a breakout and you're expecting a second leg sideways to up, you want both bars to close pretty much on their high. And here we have 12, 13, but a tail on top of 13, and we follow through 14. So that's another sign that we're probably not going a lot higher over the next several bars. The bears never really had much of a sell. There was a triangle, bar 20, so 3 tops. We have here and a higher low here, but not a very good sell signal bar. The bears got a close below the moving average 25, but barely below, and the bar is not big. A second close below the moving average 26. We might be always in short 4 consecutive bear bars, but it's not impressive. The bull's got a reversal 27, pull back to the moving average, but 4 bear bars. That will reduce the number of bulls buying above 27. A lot of bulls will wait for a second buy. Maybe we'll get a micro double bottom with 26. Instead, we got a bull inside bar 29. At this point, it looks like a trading range. We have a reversal of 27, but it's after 4 bear bars. We have a weak entry bar 28, and we know that this is probably already in a trading range since 14, and it probably will last a couple hours. So we may get a new high, and the top of the trading range might be above 15, but we're probably not going a lot above 15 over the next hour or so, because we should get a couple hours of sideways to down, because that's what typically happens the day after a buy climax day. And then we have a tight trading range here, another triangle. We have the double top, and then 3 lows here, higher low. So breakout mode again. This triangle, we got a bear breakout. This triangle, we have a little bull breakout 40, and then a bear breakout 41. But does not look like we're going far. Bull bar 42, failed breakout below the triangle. Another pullback to the moving average. We're probably always in long. But we're also in a very tight range. And I don't know if this is a couple hours yet. Probably not yet. Well, it is. 14, and then 24 bars would be 38, so it's a couple hours. So we've met the minimum objective from Friday's buy climax. So the bulls might get resumption here, but we have a lot of trading range trading here, a lot of trading range trading here. I think that we're not going to go very far up. I think that we're not going to go very far down, and therefore stop order traders are going to be disappointed, and it's more of a limit order market. Traders buying anything bearish and buying more lower, selling anything bullish and selling more higher, and taking quick profits. So bulls have a tail breakout below a triangle, 42, and then a high 1. The bull trend resumed, 43, pullback 46, a high 1, but a doji bar. So that's not going to attract a lot of buyers. And the bears, they have a double top 49.35. So it's a double top, barely lower high, major trend reversal. Actually, it's a perfect double top 49 and 15. But look at the market, tight trading range, every bar going sideways. I think that's not going to get many sellers. And then higher high 50, higher high major trend reversal. But tight trading range right above the moving average. They've been buying the moving average all day. Probably buyers below 50. Probably buyers below everything, below 42, below 26. Probably sellers above everything. Well, they did sell above 35. They sold above 15. They'll probably sell above 50. So more of a limit order market. Bear surprise 52, closed below the moving average, closed on the low of the bar. Is this the start of a major trend reversal? Well, probably not. A lot of bears will look at this, and a lot of traders will look at this and say, look at the past 40 bars, 30 bars. It's all tight trading range, limit order trading. There might be more traders buying the close of 52 than selling the close. So for me, I'm more interested in buying the close. If you want to trade with stops, you can buy above a bull bar on a reversal up, 53. And can you hold for a swing? Well, look at the past 40 bars. What do you think? What do you think is going to happen? Are we going to start a bull trend? Are we going to get bull trend resumption? Bull trend, trading range, trend resumption up? Probably not. It'll probably go up a little bit. So traders take it, hoping to see a big bull surprise bar, knowing they probably will not. So they go in hoping that they're going to get a swing up, but if they get disappointed, they'll switch and scalp up. And the entry bar 54, disappointing, follow through 55, disappointing. So a lot of the bulls will scalp out. And because it's a disappointing rally, bears will look to sell, maybe at the 50 high and then scale in higher. Breaking out 58, 59 to 60, good for the bulls. Probably going to get a second leg sideways to up. But the breakout bars are not very big, and therefore the bears who sold the 50 high probably are going to be okay. It'll probably come down and test that high. Probably will fall at least one tick below it. Bears trying to get a reversal, 61, 62, but this is the best looking trend move up or down all day. So we should get a second leg sideways to up, and therefore it's not a very good sell below 61 or 62. Bulls trying to get a high 165, similar to above 53. But what's different is we have 3 decent bear bars, and we did not get below the moving average. The other pullbacks fell below the moving average by a point or two, and here we're above the moving average, and we have a tail 65. So I suspect there'll be more sellers than buyers above 65. For the bears, they're hoping this is the start of a bear trend, and 65 is an inside bar, so it's a low one sell. But nobody's going to sell below a bull bar right above the moving average, so there'll be buyers below 65 and below 66. And there were. And the bulls got outside up 68. It's a high 265, but it's a little bit bigger than I would like, so I don't want to buy with a stop. It's a couple ticks bigger than I would like for a stop entry. It's buying too close to the high of the day. There'll probably be sellers above the high. The bears, they have a little bit of a wedge, 68, pause, 70, pause, 72, but a bull bar and a 6-bar bull microchannel, 72, sell it. Nobody's going to sell with the stop below 72. There'll be buyers below. They'll sell with a limit order 61 high. They'll sell with a limit order 72 high. Bulls another high 1, 75, but two pretty good bear bars. Probably sellers about 72. So not great math with the bulls buying about 75, 76. So for stop entry traders today, bar 3 is the first possible one. Consecutive closes above the moving average. Decent body closing on its high. But the top of the tight trading range, and big bar, big risk, and we know we're going to enter a trading range by the end of the second hour, so probably not great reward. So you can buy above 5. We're going to break out 6, close above the high of the day, follow through 7, so it's 5 to close 6 and 7, but it does not look good. 10, another breakout, close above 8, so it's a buy above 10, but bear bar 11, not good. 12, same thing. 14, a high 1. We have a breakout 12, 13, but tail 13. Not a great stop entry buy unless you're willing to scale in lower. So if you bought above 14 and you did not get out on 18 after disappointment 16, you could buy more above 28 and get out at the midpoint of your two buys, the 14 high and the 27 high, or take a chance that we get up to the 14 high, and then you could get out break even on your first and with a profit on your second. So not a great buy above 14. Bear surprise 16, so probably a couple legs sideways to down. So not a great buy. 17. Bulls might buy above 27 or 29 or 30. And then I would not do any stop entry trading here. 42 might be okay, but I don't think it's going to turn into a bull trend. 53, 54. You could take that, buy above 56, 658, 59, 60. I don't think we're going to go up all that far. And 68, it's a high 2, but tight trading range 64, not great. Bad entry bar 69. What about buy the close 70? I would not, because there should be sellers above 61. And then 75, 76. I'd rather be selling above 72 than buying above 74, 75 or 76. And the bears never really had what I thought was a good stop entry sell today. You know, maybe you can argue 23 breaking below the triangle, so sell below 23. And that would probably be it. You know, 51, 52, not very good. 62, not very good. And then limit order traders, everything was limit order trading early on. They sold above the bear bar 1. They bought below the bull bar 2. And then we had a bull micro channel, so bulls bought below 15. And then in here, if you want, you could do limit order trading, but I'd rather be looking to buy. So, you know, buy either below 16 or at the moving average or on a reversal up. And then in here, you know, it's really, most traders should not trade when it's that tight, but anything that looks bearish, they buy it at 32, 35. Anything that looks bullish, they sell it at 34, 37. And that's true all through here. And up in here, you know, whatever, 9-bar bull micro channel, they'll buy the 61 low. 5 bars down, 65, they'll sell the 65 high. They'll sell the 61 high. They'll sell the 72 high. And then here, 5 bars, 6-bar bull micro channel, they'll probably buy the 72 low and 1 point lower, or simply start to buy at 1 point lower. So not a great day for stop order traders, even though it's a bull trend day. Bulls trying to get up to the targets above. I do not think this is an important target, because there are 2 other possibilities for the measured move, this high or that high. So I think we're probably going above this measured move, and maybe we'll go up to measured move based on that. But it looks like we're going to get up to 4,400. All the way up, the market, since November, the market has been stalling at every big round number except one, 4,000. It broke above 4,000 and then stalled at around 4,100, stalled or 4,200 for over a month. And a little bit of a pullback at 43, probably a pullback at 44. Everybody knows the market's overbought. Everybody knows we're going to get a 10% correction. I think it's going to be a 15 to 20% correction. Nobody knows what the news will be that causes the correction. We're coming up to some important earnings next couple of weeks. Any of that could cause a correction. But one thing everyone also knows is even if it falls 20%, traders are going to buy the sell-off. So not a lot of downside risk if you're an investor. You're planning on holding for the next 6 months, next 30 years, not much downside risk. Okay, question, what do you think about a swing short below 52? Taking a chance that it's a wedge, 1, 2, 3, or a spike in channel 1, 2, 3, little wedge here, 1, 2, and 3. I personally would not do it. You often hear me talk about the market being always in long and breaking below the moving average. And what do I always say? I always say the bears want consecutive closes below the moving average, and they want the bars closing near their lows. 25, 26 consecutive bear bars closing below the moving average, but not big bear bars and not closing on their lows. So, and then here, 52, it's one bear bar. I understand thinking that you don't want to risk too much because the probability of a bear trend is not great, but the probability would be significantly higher if you wait for one more bar, and if that bar is a second consecutive bear bar closing on or near its low. So for me, I may have bought the 52 close because in general, whenever I look at the market and I say the bears need one more bar, I know a whole bunch of computers are going to come in and prevent that one more bar. So whenever I look at something, I think the bears need one more bar. It's usually a buy because they're probably not going to get that one more bar. But I can understand the logic, taking a chance, a higher high, major trend reversal. This could be the start of the bear trend. If you did sell below 52, I would get out above 53 because 53 is a buy signal bar or a bear trap, a failed breakout below the moving average. So there's not much risk to selling below 52. I personally would rather, if I'm going to be selling low in a trading range, I want to make sure the market is clearly bearish, and 52 is not quite enough. Now, what are some of the trades that you took today? Pretty much I took mostly limit order trades. I did take some stop order trades. I don't remember which ones I took. The kinds of trades that I would take would be probably buying above 29, 42, 53 or 54. And I did take a lot of little limit order trades, a lot of scalps. Like I said, anything that looks bullish, I was inclined to sell it and sell more higher. Anything that looks bearish, I was inclined to buy it and buy more lower and try to buy below prior lows, try to sell above prior highs. And scale in. I did sell the 72 high and scale in and scalped. Okay, hope everybody has a good night. The market is just going up, right? No sign of a top. Every time the market gets to resistance, it breaks through it. And the market always is going to break through resistance, all resistance, because the market is in a bull trend on the yearly chart and monthly charts, and has never been in a bear trend in my lifetime on the monthly chart. We've had some big corrections. We had a 70% correction about 10 years ago. We had the crash in '87, but on the monthly chart, I don't think it was enough to call it a bear trend. So it's always in a bull trend, and therefore, no matter what resistance there is, the market at some point is going to go above it. That's not true of support. Because it's a bull trend, some support is going to hold forever. So if you look back at that 70% correction 10 years ago, put up a monthly chart here. Here's the monthly chart. So is this a bear trend? It's a 70% correction from there to here. But a trend, I want to see lower highs and lower lows. We have a lower low here, good, but we never really had a lower high. We had a minor lower high here. So it's a bear market. It fell 20%, but it's not really a bear trend. So, back to the 5-minute chart. So, you know, the market is going to go, it's going to break above that. I don't know if it's going to break above it this summer, but at some point it's going to get above it, right? So even if this is the top, and even if we sell off 20%, we'll get above it next year, if not this year. So resistance, you know, the market is always going to break above resistance at some point. And as I've been saying, every top attempt fails. The market keeps buying reversals. But one of these days, probably this summer, August, September, October is a time when the market often has corrections. So, you know, maybe sometime September, October, August, September, October, you know, we'll get a 15% correction, maybe a 20% correction. But traders will buy it. All right. Hope everybody has a good night.